Shares of NIO found themselves under significant pressure after the company released its fourth quarter report. In today's video, we will discuss NIO stock major announcements. Number 6. NIO missed analyst estimates. Shares sank 13% to close at $43.29 on the stock market today. NIO stock remains under the 50-day line after a failed breakout past a $57.30 buy point, according to MarketSmith chart analysis. The relative strength line, which compares a stock's performance versus the S&P 500, is now below January 2021 highs. NIO reported financial results of quarter 4 fiscal year 2020 that missed analysts' expectation. The company posted a loss per ADS that was bigger than what analysts had forecast. Revenue also missed expectations. Vehicle deliveries, the results of which were released in early January, beat analysts' forecast. The company noted that it launched the ET7, its first flagship sedan, on January 9, 2021. NIO reported revenue of $1 billion and GAAP loss of 16 cents per share, missing analyst estimates on both earnings and revenue. The company stated that it delivered 17,353 vehicles in the fourth quarter. For the full year, deliveries of vehicles were 43,728 compared to 20,565 vehicles in 2019. NIO added that it had already delivered 12,803 vehicles in the first 2 months of this year and expected that first quarter deliveries would be between 20,000 and 20,500 vehicles. The company also expects that its revenue will grow by $1.1 billion in the first quarter. Traders did not like the report and sold NIO shares, which are down by about 8% in today's trading session. The company missed analyst estimates while its delivery guidance was not aggressive enough for the market. Number 5. What's next for NIO? NIO Inc. (NIO) has seen its shares stage a dramatic turnaround in the past year. The China-based electric vehicle EV maker was on the brink of bankruptcy in 2019. But last April, state-owned entities made a $1 billion investment in NIO, saving the EV company from financial ruin. Since then, NIO shares have skyrocketed, and the company today is one of the world's most valuable automakers. Investors will be looking for significant improvement in NIO's financial position when its report results on March 1, 2021 for quarter 4 fiscal year 2020. Until this quarter, NIO has often posted strong revenue growth, but it has posted net losses in every quarter for the past 3 years. For quarter 4, analysts are expecting a rapid rise in revenue, but they also estimate another loss per American Depositary Share, ADS, for NIO, though it would be the company's lowest in at least 13 quarters. Investors are also interested in NIO's vehicle deliveries for the quarter, a key metric indicating the company's vehicle sales. Vehicle sales generate the majority of the company's revenues. NIO already released totals for the fourth quarter and all the fiscal year 2020 in January. Both quarterly and annual vehicle deliveries rose considerably and surpassed analyst expectations. NIO just scored its first billion-dollar quarter as its growing lineup of luxury electric SUVs resonates with buyers. But a global chip shortage could curb growth for the Tesla of China. It should be noted that NIO shares gained more than 1,000% in just 1 year, so the market expected strong results from the company. Number 4. NIO stock technical analysis. Shares remain below the 50-day line after a failed breakout past a $57.30 buy point in February, according to MarketSmith chart analysis. On March 2nd, NIO stock extended losses 9% to $45.07 after mixed earnings and a warning about the automotive chip shortage. The relative strength line for NIO stock rose sharply for most of 2020, but is starting to lag. A rising RS line means the stock is outperforming the S&P 500 index. It is the blue line in the chart shown. NIO stock went public at $6 in September 2018. It hit a low of $1.19 in late 2019 on sales and cash woes. The company staged a strong rebound in 2020 along with China EV sales. Shares earn a superior IBD composite rating of 80 out of 99. The rating combines key fundamental and technical metrics in a single score. An unbeatable 99 RS rating will exceed the 80 or higher that investors in top growth stocks would want to see. NIO's accumulation distribution rating of B+ reflects moderate buying by institutional investors over the past 13 weeks. NIO is well traded with decent institutional backing. 677 funds own shares as of December, up 25% from September. In fact, NIO shows 8 quarters of rising fund ownership, according to the IBD stock checkup tool. Number 3. NIO earnings and fundamental analysis. On key earnings and other fundamental metrics, NIO lags. It's a young and fast-growing company still looking to turn a profit. NIO stock earns an EPS rating of 51 out of 99 and an SMR rating of D on a scale of A+ to a worst E. The EPS rating compares a company's earnings growth versus other companies. The SMR rating measures sales growth, profit margins, and return on equity. On March 1st, NIO delivered a wider than expected loss for the fourth quarter. NIO lost 14 cents a share as revenue more than doubled to $1.2 billion. Quarter over quarter, NIO saw vehicle margins expand and cash nearly doubled. While earnings remain elusive, losses are narrowing. Analysts expect NIO to pare losses to 41 cents per share in all of 2021 from 66 cents in 2020. Revenue is seen nearly doubling to $4.89 billion in 2021, according to Zacks Investment Research. For the current quarter, China's Tesla warned of slow growth as a shortage of chips hit EV production. While NIO's quarter 4 results were mostly in line, it outlined a very real path to milestone 100,000 deliveries in 2021, Deutsche Bank analysts said in a March 2nd note. For context, NIO delivered 43,728 EVs in 2020 and 20,565 in 2019. Number 2. Outlook for NIO EV stocks. As the EV battle heats up, China's NIO, Li Auto, and XPeng are expanding operations to fend off Tesla on home turf. NIO's looking to increase EV production capacity to 10,000 units per month in the second half of 2021. It expects to reach 150,000 units per year in the first quarter of 2022. Currently, it's limited to 7,500 units per month due to the chip shortage and higher than expected demand for its new long-range batteries. NIO currently sells the ES8 and ES6 electric SUVs and a new EC6 electric crossover. Johnny Rick, Shutterstock.com. Analysts are bullish about both China EV sales and global EV sales, adding further lift to NIO stock. In 2021, EV sales are expected to rise more than 30% to 1.8 million units in China, according to the China Association of Automobile Manufacturers. Globally, EV sales are expected to rise 70% in 2021, according to IHS Markit. Growth drivers for NIO include the new EC6 electric crossover and the ET7, a highly autonomous electric sedan set to arrive in early 2022. The ET7 could be the first EV to offer a solid-state battery and 600 miles of range. Meanwhile, NIO's put battery swapping technology at the heart of its business model. Number 1. Is NIO stock a buy now? From a fundamental perspective, NIO's financial condition is improving after debt and liquidity fears slammed shares. NIO is paring losses while delivering huge top-line growth. The outlook for NIO sales and overall EV sales seems robust. After robust sales in China, NIO's plan to expand internationally promises more runways for growth. Major Wall Street firms also view its battery innovations positively. Similar to Tesla and China's BYD, NIO may become a battery play as much as an EV stock. But the EV wars are heating up as legacy auto and tech giants ramp up and get into the game. In their near term, the chip supply crunch will curb NIO's growth plans. From a technical perspective, the white-hot China EV stock failed a breakout past a $57.30 buy point. Its RS line is lagging after a strong rally last year. Do let us know in the comment what you think, how far NIO can go. Please subscribe to the Stock Advisor. Thanks for watching.